Good afternoon.
Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks ended mixed on Wednesday after the Federal Reserve's decision to cut interest rates for the second time this year. Stocks erased some momentum after Fed Chair Powell indicated a December cut is far from a foregone conclusion. And stocks were actually kind of mixed, very red, mega caps outperforming. That's the theme of this week. We're seeing the mega caps outperform. We're having a little bit of price action go into these names, particularly the semiconductors. Nvidia, AMD, MU, AVGO were all up like 3% in excess of 2.5% here today, along with the equipment manufacturers, Arista Networks, when you look at APH, Lam Research, Applied Materials, KLA Corporation. These were very, very green. However, all of the software names, or the semis that have a software component to them, and just software in general, took it on the chin. You see Palantir was up 4% for infrastructure. Microsoft was flat, everything else was red. Apple was kind of flat today, along with Amazon and Tesla, and then Google was up 2.74% into its earnings, and Meta was very, very flat. And that was the outperformance here. Even just a flat day was clearly outperforming the market, because when you look under the hood, consumer defensives, right, very, very red. When you look at real estate, not a good day for real estate, neither for utilities. Financials through and through were just like red, not disastrously red, but just a red day nonetheless. This is what the market looked like. If you dive under the hood, you can see right here this massive drop around about 2:30 p.m. after Jerome Powell's speech, when he actually go ahead and cut, right? But it was more of a hawkish cut more than anything else. The S&P 500 pretty much flat here today. Only two sectors gained: tech, XLI, and energy, right? Everything else fell. And you can see stuff like real estate, staples, materials. And the reason why these stocks fall is because they are rate sensitive. Jerome Powell pretty much pouring cold water on the fact that a December cut is not a foregone conclusion, that we might not get it yet. And that is why stocks were down here today. Every single factor and size segment was red, except for large cap growth that was up 0.2%, but everything else was red. Core, value, mid caps, small caps. It was just a disaster. It was just a very red day through and through, and it really just stemmed off Jerome Powell's words. Now, the FOMC did cut rates by 25 basis points. The market was expecting that. The Fed also did come out and say that they're going to roll over the MBS payments into buying treasury bonds. That's somewhat like QE, but it's not going to be a massive nominal figure that's going to make a dent in the market. And ultimately, why the market was moving today was that Jerome Powell said a December cut is far from certain. There's also a lot of division in the FOMC as to where rates need to go. The market's not really liking that division, and that is why we saw the price action we did today. However, this is a clearing event. The FOMC is behind us. We did get 25 basis points worth of rate cuts, and now it's up to the market to decide what to expect for December. However, what also moved the market today was some of the earnings and some of the big tech names. Now, Nvidia stock jumped to fresh record highs, guys, up another 3% today after President Trump stoked optimism for an easing in the curves that have weighed on Nvidia sales in China. Trump said he may bring up Nvidia's Blackwell AI processor in his highly anticipated meeting with President Xi on Thursday. And by the way, after this move, Nvidia now has a market cap of $5 trillion. Absolutely insane what this company has done. Google reported its earnings today. Now, it was up nearly 5% in the after hours, 2.65% today after smashing earnings, guys. This is absolutely insane. The estimates for Google was for a $94.1 billion in revenue. The company came out and actually reported $102, smashing the revenue estimates. As a result, EPS of $2.87 beat the $2.27 estimate. Now, this was Google also reported the best search growth in 14 quarters, so we're not seeing AI eat Google's lunch. YouTube was strong, subscriptions were plus 21%. Best of all, despite the sharp 12.6% uptick in revenue, TAC was only up 8%. and that's why search margin hit an all-time high of 42.5. Google also increased its capex expectations from 85 billion to 93 billion, and the CEO, Sundar Pichai, said our full stack approach to AI is delivering strong momentum and we're shipping at speed. Google Cloud accelerated, ending the quarter with $155 billion in backlog. The market loved these earnings. The stock was up. The AI trade, especially with that capex increase, is not slowing down. Not that great of earnings for Microsoft, at least in terms of the price action. In fact, the earnings were great. EPS beat expectations by a lot. Revenue beat expectations by a lot. Cloud sales beat expectations by a lot. I just think a stock here trading at 37 times forward earnings is a little pricey, and that is why the market sold this name off. 13% growth and nearly a 40 times multiple, not quite there. However, the company is experiencing growth through and through. I mean, when you look at its productivity and business processing, these all grew double digits, right, with Microsoft 365 Commercial Cloud and Consumer Cloud growing 17 and 26%. Azure and other cloud services actually grew 40%. And then personal computing, which is the slowest growing business, like Xbox Content Services, search, news, and advertising, that was up 16%, by the way, but the other two segments here was up 1% and 6%. So all in all, very mixed results, and total growth here was 13% for the quarter for Microsoft. And again, that elevated multiple is probably why we're seeing the stock sell off. But then when you actually look at it, Microsoft is at the same levels it was trading at on Monday. So I do think Microsoft probably goes higher over these earnings, but we should see a little bit of churn under the hood. Meta also reported its earnings today, and I thought these earnings were really, really good. I think you probably buy this dip, in my opinion. Sales of 51.2 billion versus the 48 billion expectation. EPS, however, this is where things took a turn. EPS came in at $1.05. The market was actually expecting $6.67. The reason why that happened is because Meta took a one-time $15.9 billion non-cash tax charge, which means EPS would have been $7.25, and a clear beat without that. It's a non-cash tax charge, which means on the cash flow statement, that money will be added back. So it's non-accretive to the cash flow statement, but it does impact the net income side, and that is why the stock was wobbly. Other than that, they actually guidance. The market wanted 116 billion. Meta came out and said we're looking at 117 billion in sales. CapEx increased from 69 to 71 billion. 3.5 billion people use one of Facebook's apps every single day. There's 8.2 billion people on Earth. In other words, 43% of the entire population use at least one Meta product every single day. I think you buy this dip. I think these earnings were really, really good for Meta, especially when you look at the CapEx guide, the guidance, and you adjust for that one-time charge. Meta probably goes higher on the back of this. But it wasn't all guns and roses. Fiserv was down 44% today. Financial technology provider reported third quarter earnings that significantly missed analyst expectations, and they slashed their full-year outlook. The company reported adjusted earnings per share of $2.04 for the quarter, falling below the expectation of $2.65. Crazy. Revenue came in at 4.9 billion, below the consensus of 5.3. Organic revenue was just 1% in the quarter. Merchant solutions growing 5%, while the financial solutions segment declined 3%. In response to the disappointing results, Fiserv drastically cut its full-year guidance, now expecting adjusted earnings per share of $8.50 compared to the $10 consensus coming into this print. The company also reduced its organic growth forecast to 3.5% to 4% versus 8% for the year. Absolutely insane. And then for everything we saw today, guys, there was only 1,800 advances, 4,500 decliners. We saw inflows in the New York Stock Exchange, outflows in the Nasdaq 100, the S&P 500 pretty much flat today. And guys, market momentum not looking good. The longer term averages are barely holding on. We've lost shorter term and the medium term averages. And guys, if we start to lose these longer term averages, that's where things can get a bit wobbly. However, if we hold these, ultimately, when you look long term, you want to say, hey, this is a dip buying opportunity. And we're just seeing a little bit of short term volatility here in this market. Obviously, the market looks resilient because of the mega caps, but we dive under the hood, things are not looking that good because this is the percentage of stocks, right? So you can see here, not a lot of stocks are acting very well in light of everything. So mega caps are holding up this market right now, but longer term markets and stocks are still above their average, and that is ultimately what we want to see as investors. So as long as these hold, I think we lean into this dip. If these start to fall, that's when we can start looking at potentially lower levels for us to go ahead and buy. But as it is right now, longer term, things are looking good. We just have to sit through the volatility. Now, guys, looking at the charts, a very rare day. You don't see this often. The S&P 500 flat on the day. It was 68.90 yesterday. It's 68.90 today. The Nasdaq 100 gained on the back of what we saw with Nvidia, some of those semi names, but it was an ugly day through and through. The Russell 2000 fell, the equal weight fell, mid caps, yeah, just a terrible day here for breadth. And you could see growth outperforming value by a wide margin. In the after hours, if we look at the after hours of futures, right, the futures are kind of flat here despite the earnings we got from these mega caps. So futures are flat, not really moving a whole lot. Google, Meta, Microsoft are moving, but the net reaction is just for nothing really happening in the after hours. Internationally, we had mixed price action. Europe and Middle East fell. China and India, so Asia, was up year today. We'll see what happens in the crypto space. Bitcoin and Ethereum down 1%. Based on how volatile these assets are, they're like 50 and 80 vol assets. This is really just a flat day for these assets. But holding the key levels here, the 4,000 level as well as the 100,000 level for Bitcoin and Ethereum, I still think we'll continue to just digest the massive moves we saw off the lows there. Volatility ticked up ever so slightly. Yields ticked up after Jerome Powell's message on what we saw with rates, and then the dollar was stronger than expected, up 0.4% there. I've been calling for 100 DXY since it was at the 96 level. We've been very bullish on the dollar, and it looks like that is going to materialize maybe sometime this week. Treasuries fell on the back of yields rising, and then gold was down. Silver continues to outperform. This is the second day in a row where gold was down, silver was up, right? And then crude up 0.55%. You can see here, looking at the S&P 500, we continue to look very strong for the week in aggregate. We're up about 1.46% for the week so far, but we are seeing a bit of a wick here. But this is a weekly chart. We really need to look at the daily chart. We look at the weekly chart at the end of the week. You can see that we had some crazy price action here in the last couple of days. We've had like 4 gaps up, right? Like 1, 2, 3, then a gap up right here. And now we're seeing some volatility. We're seeing some doji candles right here. We're seeing some sellers enter here in the S&P 500. However, there are still buyers, but I do think it's a little bit silly to be buying at these highs right here. Wait for a pullback sort of to the 6,800, maybe below the 6,800, 6,750 area right here. Wait for a pullback to this area right here, and then we can buy that dip looking for a move higher to the 7,000 level. I think that's what's going to happen. I think it's going to be a very short and shallow dip. Nothing crazy. We just take a measured move, probably like 2 or 3%, something like that. That's what I'm expecting. That being said, I don't want to be short this market. I'm not short at all. And if we do go higher from here, you definitely want to keep your exposure in the S&P 500. It really has been a mega cap rally though, because if we go up, we look at something like the equal weight S&P 500. While the S&P 500 is pretty much knocking new all-time highs every single day this week, we're sort of seeing somewhat of a double top here in the equal weighted S&P 500. That being said, we're still trading in a very tight range, and ultimately what the equal weight is doing is sort of just digesting this massive move we've had from the tariff tantrum lows. It's like a 46% move off the lows to the highs, and then we're just digesting. That's all we're really doing, is sort of just digesting that massive move and trading at all-time highs. But some of the signals here, you look at this, you might see it's a double top. If we go ahead, break that neckline, we can maybe then take a move to the 180 level. Ultimately, this is where you sort of want to buy this level, looking for a move probably higher into the end of the year, into 2026. But it's very, very clear the market is telling you want to be in the mega caps. They're outperforming right now, but maybe that's a bit of a contrarian signal. Maybe the market is telling you, hey, it's probably time to start looking at the equal weighted S&P 500 as well as the Russell 2000, which again, like when you look at the trend is still higher. We're just seeing a little bit of volatility at the highs to be expected. And these are the key levels where I actually want to be buyers right here. But when you look at the Russell 2000, the 2400 area, we get to this level right here and then onward and upward for the Russell 2000. That's what I think the equity curve will look like for the Russell. And for most of these stocks, I do think if we do get a pullback, you lean in, you buy those names, especially the AI infrastructure names. I think Nvidia, right? The market is pricing an upside to the numbers after the GTC event. Jensen said we have like a $500 billion backlog. The market extrapolating that, saying, hey, the stock should probably be about $220. That's why we're seeing Nvidia is moving. But I do think that if we probably go ahead, get a pullback, this is probably where you want to buy the 166 area. Do we get there? I don't know. Nvidia looks very, very strong right now. It is leading the mag caps, but again, these AI names, this is probably where you want to lean into if we do get a pullback. Stuff like AMD. Another name I do like is APLD. I've been talking about this name for a while now. It's been a very, very strong leader in the portfolio. And, I think if you can get the stock at $30, sell the $30 cash to kill puts, I do think you probably see the all-time highs of 40, maybe even 50 into the end of the year. I also do like the energy names, stuff like Plug, right? The stock has not acted too well, and it's in a very, very steep drawdown, right? 41% drawdown, but I think this this is probably where you enter. I do think we see these highs sometime a little bit later on. In terms of the neo cloud data centers, I do like CoreWeave. It's the biggest name in my personal opinion. I do like CoreWeave. You can see that CoreWeave was actually up 3.81% today. I also do like the small data center names like Iron, aka Iris Energy, right? This name looking really, really good. It does look like we're trying to put in a higher low. I think $60 is good. We probably go test these all-time highs at 73 sometime. And if you sort of want a name that's in between CoreWeave and Iron, you can look at NBIS. Massive move for NBIS right here. Again, putting in a higher low, and it looks like it's going to go to those all-time highs. We'll see what happens. That being said, I do like these AI names, some of the smaller names as well. EOSE, Energy Enterprises. This name right here, I do like this name. And again, sort of just, basing around this $40 area. I think you can actually go out and sell the $10 cash secured puts for like 50 cents into like mid-November. So that's like a 5% return. And if we do get to the $10 mark, you can just hold on to those shares. But I also do like EOSE right here. And I do think we're probably going to see $20 sometime before the end of the year. I think all of these names are just digesting a massive move we've seen. I do think we're going to put in a low and move higher from there. I think the treasury names are undervalued as well. BMNR, great place to go ahead, put your money. MicroStrategy as well, however, this name is looking a little bit sick. Well off its highs, you can see it continues to move lower as Bitcoin continues to trade sideways. I mean, Bitcoin's up 25% for the year. MicroStrategy is pretty much flat for the year. So a bit of NAV erosion that's happening, or MNAV erosion there for MicroStrategy. That being said, so bullish long term. And as Bitcoin continues to go up the way it has and continues to hit some of the targets we hear on the street, I think MicroStrategy definitely will go ahead and retake these highs. And when you pull out the weekly chart here of MicroStrategy, right, the stock is up like 25x since 2022. So, a little bit of digestion of this massive move to be expected. As long as we hold these higher lows right here, let's call it the 230 level. I do think we probably go higher here for MicroStrategy. But all in all, guys, ultimately, you just want to lean into this rally. Any pullbacks we do get. We just got the AI earnings. We got another rate cut from the FOMC. AI spending will continue into 2026. They all increase their CapEx budgets. This is simply an opportunity to buy the dip in names like Meta, like Microsoft, if you haven't, some of these smaller names, and lean into a Q4 rally 2026 as the market continues to grind higher on the back of the AI trade. Guys, and diving into sentiment, throughout this week, we have continued to push from this extreme fear zone closer to the neutral zone, but we are still in this fear camp despite the price action underlying in the market not being that great. At least this week, Monday was good, but the rest of the week hasn't been super good. That being said, we are still in fear, so technically we are still seeing a bit of pessimism in the market as the markets, especially the larger cap markets, the S&P 500 continues to make all-time highs. And I think as an investor right now, the only thing you really should be looking at is earnings. That's really what's driving a lot of the move right now. The S&P 500 reporting 10.5% earnings growth. The expectation coming into earnings season was for about 7.8%, and that's being led by tech, financials, and real estate. Look at that. 3 sectors in the S&P 500 with 20% plus growth. Materials not too far behind. Industrials also reporting double digits. Comm services not quite there. We'll see what happens after Google's earnings, after Meta's earnings. This number is probably going to change closer to about the 5% mark. But discretionary up 1.8%, but there's also 3 sectors that are falling in earnings on a year-over-year basis. That is utilities, consumer staples, healthcare, and energy. But they're in the mid to low single digits, and these, generally speaking, make up a smaller proportion of the S&P 500, except healthcare. Healthcare is somewhat of a larger sector. When we look at the macro, I think one thing we look at right now is a credit card and debit card payment volume growth. And right now, Visa, who reported earnings yesterday, is telling you that card spending is healthy and consistent into October. Visa said discretionary and non-discretionary spending is strong. US consumer is still very, very resilient. When you actually look at US debt and credit card payment volume as well, it accelerated 200 basis points from Q3 to plus 8% versus 5% in the second quarter. International was 100 basis points better to 10%. Notably, goods and travel spending are very, very strong, showing remarkable global consumer stability through and through. So for all the media headlines that the consumer is falling or the consumer is dying, whatever, that is simply not the case. We're not seeing that in the data, especially the earnings data. This is some of the highest quality data you can get with regards to the consumer. Now, looking at earnings for the rest of the week, we had the big boys report. Very mixed earnings in price action. Great earnings, however, through and through in terms of revenue growth, earnings growth, but the price action mix. Tomorrow, we have Crocs reporting here before the open, along with Eli Lilly, MasterCard, Roblox, Merck, Shell, SPGI, S&P Global. Hershey as well as Estee Lauder. They're reporting before the open. It's going to be a really big earnings day before the open here. And then after the close, we have some big names as well. We have Amazon, Apple, right? We also have Coinbase, MicroStrategy, Reddit's reporting, First Solar, Cloudflare, Roku, Vici Properties, guys. A lot of big names. But again, big ones are going to be Amazon and Apple right here. In terms of data, tomorrow we get the GDP data. We'll see if we actually get that figure with this government shutdown, which is still ongoing, by the way, for those of you that haven't realized, guys. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.